where do I start? Folks, there's an absolute massacre happening right now, and I mean massacre. I don't know what you want me to say here. This is a disgusting disgrace of a display in the after hours trading for Facebook stock. Sorry, Meta Platform stock. 22.5% down right now. Ooh, it's painful. It's absolutely painful. We're talking about a $250 stock. Now let's put that into perspective. This stock was $250. Oh yeah, not any time within the last year. It is at its 52-week low, literally right now. Can you believe it? Oh my gosh, this is absolutely crazy. You look 5 years out. When's the last time we were steadily around 250? Well, it's been a while. Before we were at 250, we're talking about 2020 numbers. We're talking about June of 2020 was the last real time before we saw 250, and this bad boy is down under 250. What is going on? Obviously, they reported earnings. We're going to take a look at those earnings and see what's going on now. Over the last 5 years, this stock looks like it's been not a great performance. And obviously, the entire last year's gains completely wiped out, now going to be showing a negative over the last 52 weeks. Pretty scary stuff. So let's look at these earnings. Now, this is what I'm shocked at, too, because personally, what I saw from Google in terms of ad rates, I felt pretty darn good as far as Facebook. I really did. You know, I would have made some big bets on this one, and I guess I'm lucky I did not in time. I'm very lucky because this is what we call nightmarish. You just can't trust this market right now. A 20% swing, there's nothing Facebook could post right now that deserves a 20.5 or 22.5% swing. There's nothing they could post. I'm just prefacing that right now. Unless they say the company's literally shutting down or they're closing down Instagram, it's the only way this company should be losing this much in after hours here. But let's see. GAAP EPS of $3.67 is a miss by 16 cents. Not a company that typically misses on an EPS standpoint. They're really good at that. So I get a little bit of discomfort there, you know. They don't miss. They did hit on a revenue standpoint. Now, look, I thought this was a $34 billion line they were going to post. Here they didn't do it. $33.67 billion. Up 20% year over year. Still a beat of $230 million. Still a beat, and I really, really like that. But of course, not necessarily what I personally expected. I'm kind of shocked. I'd love to dig deeper into this, and we will, and see where kind of this disconnect is from, and why it didn't quite hit the estimates that I had out for it. Daily active people is 2.82, which is an increase of 8%. Great. The user metrics all look good. Monthly active at 9% increase. Daily active users up 5%. Monthly active users up 4%. Everything looks good. As far as a guidance standpoint, it's weird. Don't look at this, but they list expenses, total expenses for the full year next year expected to be 90 to 95 billion versus a 91 to 97 billion prior outlook. So they're expecting to spend less, obviously, but that's not something I really care about. Capital expenditures, do I care about that? No. We care about, obviously, is the revenue standpoint. We care about a forecast on that, and that's why this stock is seeing the most of the down movement, in my opinion. $27 to $29 billion expected this in Q1, which is a 3 to 11% growth year over year, which is pretty low for Facebook. And the consensus was at 30.27. So analyst consensus were a lot higher, and they didn't quite hit those. And that is why you see a big dip. Now, is that worth it? I don't think so. That's nowhere near worth shedding 22.5% of the value. 1/4 of this company nearly the value is shed 1/4 because they missed the guidance by a couple $1 billion. Not really fair, and not even guidance. This was analyst consensus anyway, so screw them. But there might be more. That's why we look at the press release. We dig into this. Look at the financials here. Total revenue line here. 33.6. Obviously, how does that compare to last year? 28. As you can see, The net income line actually declined if you look at this quarter. So curious on that, but 10.2 compared to 11.2. Slight decline, but if you look at the full year, because this is Q4 obviously, full year we saw 37% growth in revenue, quite significant. And a net income line of 39.3 billion compared to 29.1 of the year prior, so 35% growth there. I mean, that's pretty darn significant. $40 billion of net income that they brought in this year off of a revenue of 117 billion. That's incredible. A third of their revenue is straight net income. That is fantastic. Imagine, I mean that's just crazy. That's just absolutely crazy. It's really good. Again, I always say this all the time. Top tier. I mean, this is a top tier company when it comes to the net income line. Absolutely. So obviously, we saw family daily active people. We saw the daily active people. Ad impressions and price per ad is important. Obviously, we talked about ad rates. That is where my main focus is with this company because that's going to be kind of the future growth here. Ad impressions delivered increased 13%. Oh, average price per ad increased 6% as well. Okay, for the full year, increased 10%, and price per ad increased 24%. So more people seeing the ads and much higher price per ad. That is what I'm talking about here. 25% growth nearly. Price per ad over the last year. That's significant. That's significant. Ad rates is where they get the majority of their money. I don't get it. Oh gosh, it's just crazy. It's just crazy. I don't get it. Yeah. New financials beginning the fourth quarter of 2021. Report our financial results based on two reportable segments, which is the family of apps and the Reality Labs, which is obviously going to be previously was listed as other revenue, now listed as Reality Labs, which obviously main focused on the Oculus Rift. We're going to include augmented reality glasses with Ray-Ban in there. So there's going to be other, really they're trying to develop this segment a lot more. But the family of apps obviously going to be the significant moneymaker right now, as that's where all the advertising revenue is from. And the others, they're doing well. So if you look, again, and you can see it too, advertising, look at the money. The money is in advertising revenue. So for the full year, I look at the full year line here, pretty darn nice. $114 billion of advertising revenue on the year. You can see how that compares to the 2 years prior, quite significant. And the other revenue is pretty nice as well. You look at the Reality Labs, that's kind of what I wanted to focus on here. Seeing that it's Q4, this is pretty darn important. So you look quarter over quarter, really nice growth, and year over year, really nice growth as well. $877 million here, against 717 of the year prior in this quarter. So they're really growing that segment pretty darn significantly. Not quite by as much as they're growing advertising revenue, obviously 27.3 compared to 32.7, but still. And if you look on the full year, the Reality Labs segment has grown massively, 2.2 billion compared to 501 of just 2019 and 1.1 of 2020. So we're talking about doubling the revenue in this segment. It's darn significant. It's a segment that you need to look at for the future of this company because it's going to be taking a big role, and they're really focusing on it. Hardware on top of obviously their existing programs, which is mostly advertising revenue. So fantastic stuff. And with that too, as they're growing it, you can see operating loss is it's increasing. So that's where you see kind of more of a miss on the GAAP EPS standpoint. In my perspective, I know there's fear that it's the Apple privacy laws. Look, it's this segment. This is where you're seeing this, and it's, I mean, significant. Kind of a bummer here when you look at the operating loss line here has also increased pretty significant. $10 billion here of operating loss in that segment, but they're really working on developing, and that's why. And in the future, obviously, this turns to a profitability standpoint, but they've already have a very significantly profitable aspect when you look at the family of apps, where half of their revenue is operating income. That is wild, wild stuff. Oh, I think they're plowing the streets. Isn't that great? It's snowmageddon out here, folks. It's great stuff. Nothing crazy there. Nothing crazy there. Ticker symbol Meta's Class A stock is expected to begin trading in the Nasdaq under Meta in the first half of 2022. Curious was on that. Obviously, that's a new announcement. Will that bring more people in? Probably. I think there's a little bit of a stigma of the Facebook name that, doing something like this actually does help bring in new shareholders, as weird as it might sound, but it really will. We love looking at the financial documents as well. Financial form is incredible. We love the balance sheet because this company's always got a class action balance sheet. I can't read this line here. I can't read this line, okay? But the total current asset line, you can see where it's at. You see where it's at compared to last year. Really nice. Total assets in general at 165.9 compared to 159.3. Now you saw a pretty big decline in the total current asset line, mostly because of the marketable securities. Looks like they obviously used some of that towards purchase, is what it looks like. Maybe potentially even share repurchase. We'll see. But total assets did grow here by around $6 billion, a little over $6 billion, I should say. So nice growth there. Now, from a liability standpoint, total current liabilities did rise, 21.1 compared to 14.9, and total liabilities in general did rise as well, 41.1 compared to 31. Yeah, so we saw a shrinking stockholder equity, which is pretty rare for this company. You don't typically see it, and this is obviously over the full year, but it's not something too significant. They lost $4 billion on this balance sheet, a little bit under $4 billion, I should say. In terms of equity over the last year, but they did grow the balance sheet still overall by around $6 billion. So I'm not really all that upset by this. I think it's still a ridiculously good balance sheet. And why is that? Because they have $124 billion. They've got three times what you see in the liabilities. 165 billion in assets and 124 billion in shareholder equity. What can you say? That's ridiculous. That's ridiculous. The balance sheet's prime. Look, this stock is maybe one of the cheapest stocks out on the market right now. We're going to be talking about a P ratio under 20 for Facebook. P ratio under 20? This is Facebook stock. The company grew 33% this year. 33%. Next year growing over 10%. Double-digit growth still. Market cap. Oh yeah. Market cap right now sitting at 90 billion. Not true. Down 20% from there. How does that make you feel? How does that make you feel when this stock's trading at a $720 billion market cap? Well, it makes me feel like this is a ridiculously cheap stock. Okay? They made $120 billion of revenue, trading at only $720 billion market cap. Less than 7 times the value for a company like Facebook that is a money printer. This is the easiest buy probably in the history of the stock market. I'm just being clear with you. If this opens anywhere near 250 tomorrow, I will be putting in $1,000 just straight up into Facebook. $1,000. Because this is the biggest oversell I may have ever seen. I hope you have a great day, folks.